Are we truly in for a big collapse we haven't experienced since the Great Depression? For over 10 months, we have seen many things happening recently in the economy, even with the contraction of the money supply. As of October 2023, the U.S. M2 money supply, which includes savings deposits, time deposits, balances in retail money market mutual funds, and more liquid assets like currency and checking deposits, stands at $20.73 trillion.
This is the biggest crash we'll ever see in our lifetimes. It's called the everything bubble. Everything's going to come down. And that's how you can prepare for it.
This is a slight decrease from the previous month and a more noticeable 3.30% drop from a year ago. Such a decrease in the money supply can be significant, as it has historically led to changes in inflation and interest rates. The U.S. economy in 2023 turned out to be quite a surprise package. Despite the gloomy predictions at the start of the year, the economy showed robust growth. It's like the economy just said, "Nah, I'm not ready to slow down yet." We saw strong consumer spending, job growth, and even real wage increases, especially for women and black workers. And guess what? Manufacturing investment hit historic highs. Legislative pushes like the Inflation Reduction Act partly fueled this boom. Now, about jobs. They continued to grow steadily, although not as crazy as in 2021 and 2022. What's remarkable is how the unemployment rate stayed low, even with inflation going down. It's like walking a tightrope and not falling off. Pretty impressive, right? But it's not all sunshine and rainbows. The rate of inflation, while it has been decreasing, still looms over us. It's like a cloud that's slowly moving away, but still casting a bit of a shadow. The good news? Real wages began to grow in 2023 as inflation fell from its peak in 2022.
And what's really driving it, to Andrew's point and Christine's as well, is very strong labor market. We've got a labor market that, where jobs are being created, there's strong wage gains, and that's driving spending, driving real incomes and driving spending, which is driving more demand and continuing to drive labor market. So the labor market is really pulling the economy.
Now, let's talk numbers. The U.S. economy grew by 5.2% in the third quarter, which is pretty solid. Consumer spending, a big chunk of the U.S. economy, grew at a 3.6% rate. This shows people were still opening their wallets despite everything going on. However, the unexpected has begun to surface. Economic activity seems to have cooled down in the fourth quarter. We saw retail sales dip for the first time in 7 months in October. Job growth also slowed, and the unemployment rate peaked at 3.9%. It's as if the economy is taking a deep breath and gearing up for what's next. So, what does all this mean for us? Well, it's a mixed bag. The economy is showing resilience, but there are signs of cooling. Keep an eye on these trends, especially how they might impact our daily lives.
We see is stronger than expected growth, a tighter than expected labor market, and higher than expected inflation. So that tells us that although policy is restrictive, it may not be restrictive enough, and it has not been restrictive for long enough.
What are your thoughts on this? Do you think the economy will continue its resilient streak, or are we in for a bumpy ride? And hey, if you found this interesting, give a thumbs up, subscribe, and stay tuned for more updates. We are curious to hear your thoughts, so please comment below. Let's keep this conversation going. See you in the next video. Bye for now.